Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, this has been an interesting week. Volatility was up. The markets had recovered quite a bit today as I record this on Friday the 26th. And as we're looking at right here, this is a one-year daily candle chart of the volatility index for the CBOE. And as I do each and every week, I've left my lines on the chart so you can see how the forecast worked out. Now, last Friday was right here, right at this candle, and I said that the volatility index would most likely rally. And look at that. It's almost as if the VIX had followed my trend line, with the end of that line being my target price. Now, we hit that target price on Tuesday. We rallied up from it on Wednesday. Thursday, we started to see some red candles. And so what does that mean today? Well, this long shadow above that red candle is telling us that the sellers started to come in on the VIX. And if you look back in the past, anytime we've seen these long shadows above the candle, here, and even if you go back here into June and the end of June right here, you'll see that the VIX has dropped from those points, including right here. You see that right there on August 15th. So I do expect the VIX to drop from here, so I'm going to forecast just like that. And I don't think we're going to see a major rally in the market because remember, the VIX is inversely related to the S&P. So if I'm expecting the VIX to go down, then the S&P will most likely rally. So the end of the line right here is my target, and I believe that the VIX is going to pull back to this blue line, which is a 20-period moving average. So I'm going to leave that in place so that we can track the accuracy next week. Now, with the S&P, that's ticker symbol SPY. It's the ETF for the S&P 500. I said that we would most likely drop and test this support level. Well, guess what? That's exactly what happened. We came right down to that support level. We had a breakout below that. But today, this is a spinning top. And look at where it is. It's right at where my pivot point is on this forecast line. So last week I said this would be a 2-week forecast. So I'm going to leave that right in place right there. I think the S&P is going to rally back up to the end of this line, which is my target. And everything is going as planned. Now, if we look at the diamonds, which is the Dow Jones Industrial Average ETF, same thing. We had the market pull back to support right here. We have the line forecast right there with the end of the line being that target. We hit the target. What I'm noticing right here, and I'm going to erase this line now because there's something happening off to the left of the chart. You see right here? That's a gap. And gaps fill about 80% of the time. Now, if you've been following along with the market guys and the gap principles here, you'll know that 80% of the time after a gap fills, the markets generally reverse from that point. And look at that. Today's low came within pennies of that gap fill support level. So my forecast for next week is going to be higher prices for the Dow. And I believe that we will make a move up towards the 20-period moving average, which, by the way, over time will continue to drop until the price action starts trending above that moving average. So that's the forecast for the diamonds. If you're looking at the Russell 2000, it's ticker symbol RUT. Same story, with one exception, is that we broke down below that support level, and we have a harami here. On Thursday, it's a harami that's bullish and a bullish candle with that long shadow below the market. Let me back up 1 second because I have to show you that the market has actually found a new support level right here, and I could even project it out just like that. And you'll see that's where the market seems to have stopped. So I'm going to erase this and use this as our new support level. And the forecast is most likely looking like this. I'm going to be a little bit more aggressive in my angle because I think we are going to trade right back up to my former target from last week. I'll erase that so we don't confuse anyone with all these lines. But I think the market is going to bounce right here. The stochastics down below are showing oversold. Remember, anything under 20 on that scale from 0 to 100 is oversold. And if you look back at all of the other times throughout the year, when the Russell 2000 either touched that line or went below it, we rallied on every single count right there. So I do believe that we're long overdue for a correction to the upside. We have a pretty significant downward move, but I think we're going to get some retracement here, again, back to that moving average. So stay tuned for that. Next Friday, we'll look at these charts, of course, like we do each and every week, to see what the percentage of accuracy is, and we're still on target. Now, if we look at the Qs, this is where the most damage was done early on in the day, because a lot of companies disappointed on the earnings. Amazon especially was pounced on, I guess you could say. The sellers just came in and pounced all over it, and that brought the rest of the Nasdaq market down more or less in a domino effect. But the good news is my forecast held quite nicely, and you can see that the target for the pivot point was right here, and I said we would test support level right there. And again, we have a harami here, and we have very close to a spinning top, which is usually a pivot point. What I would like to see is a drop in volume on Monday. I think we'll see that as investors kind of sit on the sidelines to see if there's any recovery. And I'm going to erase this and put my target a little bit further over, because I do believe that the Qs are going to rally just like the Dow and the Russell. And I'm going to justify that by putting the end of that line as my target, which in turn will most likely match up with the 20-period moving average. So everything is looking good there. If you'd like to learn more about what we do at The Market Guys, just go to themarketguys.com, and you'll see a bunch of information that will help you with your education. We already have the link set up for next month's open house Q&A. All you have to do is click on this link down here to sign up for the weekly market report, or register right here for the monthly event, which again we call the open house. And that'll bring you to the registration page. And if you're interested in learning more about how to trade the gaps and how to draw support levels and such, all you have to do is click on the video tab at the top of the page right there. It'll bring you to a video library that we call Market Shots. And you'll see right here, a little bit ways down on the right-hand side, is a link that says Trading the Gap. That'll explain to you everything that I've just said on this report, and a little bit more information to help you with your trading and investing. So hopefully you're getting a lot of content and value from our website. We thank you for following us each and every week, and we look forward to our next trading session next week to see whether or not we rally as we forecasted here today. So have a great weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.